We've seen a rally in the equity market, yet not at all when it comes to copper, really. Ed, how much more downside do you see for copper?
Yeah, well, we see about $400 or maybe more downside. We think the little upside that we've seen in copper is transitory. I think it's based on two factors. One is the euphoria that affected all markets, lifted commodities after they were all in free fall, and there are some people in the investor community still expecting that the recovery will be V-shaped. The other factor, of course, is the force majeure that have been called by Chinese importers. We have it in copper, we have it in LNG, we have it in a whole bunch of agricultural materials. We have ports that can't discharge whatever the cargoes are. We have that backing up on the supply chain back to whatever the port of export is. We have freight rates that are plummeting as a result of all of this. But people actually took the force majeure as a bullish sign. And that we think is going to unravel, and we think the fall that we saw is going to continue. And even if you look at that recent rally, take a look at the last 20 days, and prices are still down everywhere except maybe sugar and cocoa.
And gold.
And gold, of course.
So, yeah, it's a totally different story. Had that safe haven appeal well before this even happened. What kind of upside do you see when? How do we get to 2000?
Well, the 2000 we think is in the medium term. We think it's plausible in 21, depending on what central banks are doing and what, in two respects. One is what are they doing buying gold, and what are they doing in terms of rates. But we see the structure for the future for gold being, quite good. We're looking at a 1575 price by the end of the first half, and a 1625 price by the end of the year. On the way to 2000, potentially in 2021.
So when you take a look at, say, the metals, whether you're dealing with gold or whether you're dealing with copper, even aluminum, I would say, or nickel, how's positioning? Like, how much of sort of the sell-off that we've seen has to do with where we were positioned? Like, you had managers who were really light on gold and really heavy, say, on copper.
So we think that that's exactly what we've seen. We've seen a sell-off of the length. That sell-off of the length has a way to go. The oil length wasn't that long. It was kind of in neutral territory when the sell-off began. So positioning has gone from neutral to short, but we think there's going to be, more short or reduction of the length to go.
We won't see a V-shaped recovery like you say, but if we see sort of a U, I mean, does copper really have what's the upside then? Yeah,
we think the upside is quite substantial. We have a $6,300 target price for next year. We used to have a $6,700 target price for next year. We think the end year is going to be in the $6,000 range. So we think the second half of the year could be quite strong. And in copper, unlike oil, unlike iron ore, the market really is at the point where any increase in demand at the margin is going to turn to higher cost material, and there are in the market really some supply problems ahead. There are labor problems ahead. The copper market is not exactly like the oil and gas market.